Hello, everybody. Hope you're having a great day wherever you are. And today we have a very interesting news. Today is like the historical day in terms of news. So let's just dive into it. First, US pension funds take the plunge on crypto investing. So Morgan Craig, an asset manager focused on institutional clients and family offices, announced Tuesday, which is February 12, 2019, a new crypto-focused venture fund with $40 million invested. The two public pensions anchoring the fund are Fairfax County, Virginia's Police Officers Retirement System, which has 1.45 billion AUM assets under management, and Employees Retirement System, which is Government Employees Retirement System, which has assets under management of $4.25 billion. Other investors include a university endowment fund, a hospital system, an insurance company, and a private foundation that are not named. So what are they going to invest in? So the way that this fund works is more like a traditional venture capital fund that they're going to invest mainly in equity of companies in the blockchain and digital assets industry. But so apart from that, they will also hold a small percentage of actual cryptocurrencies like Bitcoin in those more liquid ones. So definitely the more in terms of market cap, definitely more higher ranking ones, and also the trading volume is much higher. So definitely the top cryptocurrency, and Morgan Craig partner has specifically named Bitcoin as one of those that they will hold as well. Now, the other thing is Morgan Craig has also invested in major popular names in the crypto industries, including Coinbase, Bakkt, BAKKT, BlockFi, a crypto lending company, Trust Token, Harbor, and Good Money. All these are very well-known companies in the industry. So how do they pitch to the retirement funds that make them invest? Because they are the first pension funds that we know to date that have invested in cryptocurrency. First, they use the pitch that cryptocurrencies are not correlated to traditional assets like equities and bonds. And that is very important. So because in the upcoming crisis, right, the equity and the bond market are expected to crash, and so cryptocurrencies is important as an investment to make sure that their investments or their capital remain safe, right? So it is uncorrelated, and not only that, you can just invest a small amount of money with outsized returns. So they convince them by using uncorrelated and asymmetric risk return. And that's exactly the main reason, I believe, because Catherine Warner, who is the Chief Investment Officer of the fund, said that blockchain technology, which was first developed to record the movement of Bitcoin, is an emergent opportunity that offers an attractive asymmetric return profile. So this is specifically highlighted by the Chief Investment Officer of the fund. So I believe this is the key reasons why they went in to take the plunge. Second reasons provided by Anthony Pompliano in his subscription to a paid subscription, which I'm a paid subscriber, so I also urge you to subscribe, is that influx of talent. That means money will generally follow where the talent goes. And crypto industry and blockchain industry is the latest, newest industries that attract top talents in the world, right? And also in a millennium. So generally, if you follow the talent, that's where you can make money, as time and again have proven. The third reason is that the belief of Morgan Craig and also many people in the industry that all traditional assets, that means all stocks, bonds, all financial assets, will eventually one day be tokenized, will one day be digitized. And that's why if you invest in the companies that providing services in this space, definitely they are going to grow, right? And also they are focusing on long term. So regardless of the price of the underlying assets like cryptocurrencies, as long as you invest in the infrastructure, that will definitely be safer, and also the long-term potential is definitely there. Yeah. So this is a really historical news, very significant, and the date of 12th of February 2019 will be historical in the history of cryptocurrency, because this is the first time that pension funds are investing in cryptocurrencies. Although it is not a lot, when I do the sums, right, when I take 40 million, which is the bulk of it, because these two funds that are named, right, the police officers' retirement funds and the government employees' retirement funds, these two funds are the major anchors, assuming they, contribute close to 100% or let's say 90% or even then. So you're talking about $36 million of it is from these two funds, and their total AUM is about 5 billion. That's 0.6 or 7% of their total AUM. That's close to 1%. That's exactly what most investment advisors or most venture capital billionaires, they have invested just that small percentage of their total assets into crypto just to test the water. And this is exactly what seems to be happening. But 1% of just these two small funds alone is already 40 million, right? And initially the fund, they only intend to raise 25 million. And they have to raise it to 40 million because of too much interest from all these funds. So that ought to tell you something. So now with this first institution coming in, pension funds, right, coming in, this will be the tipping point, right? The thing is this, as long as one fund or one institution are taking a plunge into cryptocurrency, the other institutions will start to take notice, and that will really make them start thinking, should they also be in or not? Because really institutions, they do benchmark only against one another. So now with one pension fund dipping their toes in, so it's great. I think definitely it will take notice. Not only that, this news was published first in Bloomberg. So very, very prominent news, right, that a lot of people will read, and very credible mainstream news outlets. So I think this is really the newspaper, right, or media that a lot of institution fund managers read. So yes, I think definitely it will gain a lot of marketing awareness, and then they will discuss in their next investment committee, should they also be talking to Morgan Craig, right, one of the venture capital that helps them to invest in crypto. So great job to Morgan Craig and Anthony Pompliano, right? Because they are the first, and I'm sure they have done a lot of work to educate these institutions. They must have spent few months, right, before this to educate them on what is cryptocurrency and what are the exact pitches, right, that can convince them to actually even put just 1%. They still need to be convinced. And so really, really shout out. And I'm really, really happy for the industry, because we really, really need just more institutions like this. This will slowly, slowly move the market. It's not a matter of if anymore. It's definitely a matter of when now, right? Next, we have cashing in, how to make negative interest rates work. This is a report by IMF. So this is from their website. This is a blog post published by them on February 5th, which is 1 week ago, specifically saying, and this is really, really interesting. Why? I will just shortly go to that. I'll tell you a bit of the problem first. The problem set out by the report is that with the upcoming impending financial crisis, they are saying that governments around the world, central banks around the world, does not have much room to cut their rates anymore. Because normally in a financial crisis, government or central banks will reduce their rates to boost the economy, right? To stimulate people to spend, to borrow. But now, as you can see in the charts, most of the countries have already reduced rates to close zero level, given the past crisis, right? So now a lot of the countries does not have room, because they normally will reduce 3 to 6% points in a major crisis, and the upcoming one is expected to be a major crisis. So if they reduce by 3 to 6%, then you're talking about negative interest rates. So most of them is at an average of either 1 to 2%. And if they reduce to 6%, you're talking about -4 to -5% interest rates. Now, given that people have a choice now, right? Because if you are -5% interest rates, what does that mean? That means if you put money in your bank today, which most of us do, you will be paying that interest to the bank rather than the bank paying you. So that is very key, right? So just for them to safeguard your money, you need to pay them the interest rate of up to 5%. Yeah. Whereas now they still pay you like 2% or 3%, right? Depending on if you put in a current account or a time deposit. So they pay you now to save money with them. But in the future, if this continues, that crisis happens, and if cash continues, they will have to charge a negative interest rate. And that's already happening, in fact, in some of the European countries like Switzerland, where it is slightly, it's not even minus 1% yet, but slightly negative, that people still do not care so much because it's still a small amount that they're basically paying the bank. Or maybe they are not aware, I'm not sure. But basically, it is already happening today. But in the future, this is going to happen. So what do they have to do now? The thing is this, if that happens, they foresee then a lot of people will just withdraw cash from their banks, right? Why would you want to put money in the bank and pay the bank's interest? That means your money is losing value every day because it's sitting in the bank. Might as well I invest in my own safe, right? Or I just find some other means to just save my money, or I could even move it to alternatives like Bitcoin, and I spend those Bitcoin, right? And the value are not depreciating day by day. So that is the problem with cash. Now, of course, they thought of easily, right? Why don't we just eliminate cash? But they also noted that this second chart shows that a lot of the countries now, including major developed countries, still have high reliance on cash. Look at this. US have still about close to 8% of their GDP still in cash. Japan, close to 18%. Switzerland, close to 13% in cash, right? So that still shows you that a lot of the developed countries, and forget about developing is even higher, right? They are still very much cash reliant. So you cannot just say, I want to eliminate cash. So what is their proposal now? Now they are talking about dividing the monetary base into two separate local currencies, cash and electronic money, or e-money. So e-money will only be issued electronically and will pay the policy rate of interest, and cash will have an exchange rate, which is the conversion rate against that e-money. So the conversion rate is the key. Now, just to put it in more simple terms, they say, suppose your bank announced a negative 3% interest rate on your bank deposit of $100 today. That means if you save $100 today with the bank, right, 1 year later, you will only get back $97, yeah? So in this system, they will have to put a conversion rate. So the government have to put a conversion rate of cash to e-dollars is 1 to 0.97 over the year. And after 1 year, there would be 97 e-dollars left in your bank account. That means even if you take out cash today and put it in your home, and after 1 year, you will also and if you exchange that to e-money, you will only also get $97. And if you put it into the bank deposit also, at the end of 1 year, you'll also just get $97. So regardless, you will still lose that 3% by the end of that 1 year. The other alternative is, of course, you just spend that $100 today. If you spend $100, then you will not lose the money, but you have something else, right? So that's what they want to do. They want people to either you lose that 3% after 1 year, regardless of where you save, or you spend it so to stimulate the economy, right? Now, the thing is this. So this is really, really bad, because in a crisis, already a crisis happened, everyone will be suffering, right? So now they are doing this negative interest rate. So that means you cannot. So, and then they make it so hard for you that regardless, even if you put bank into a bank account, or even if you keep cash yourself, as long as you don't spend it, 1 year later, you will lose 3% of that purchasing power. That is crazy. So what happens is that then in that case, it makes sense for people to hold alternatives. That means to put your cash into cryptocurrencies, because this is one of those money where, right, it has a chance to appreciate in a situation like this. Because if in this case, everyone will look for alternatives, and the best alternatives out there today is cryptocurrencies, where it is liquid, it is safe, right? Because if you hold the password, you hold the key, you have your funds, right? And you don't need to declare it to anyone. You can just save it with yourself into your safe. You can just save that thumb drive, right, in your safe. It's very, very easy. and it is super portable, right? And in that case, then cryptocurrencies will increase in value. So you see, that's the thing. The full report, they have first published this more detailed research report back in August 2018. And now, very interesting, February 5th, they are highlighting again this similar story in a blog post. And then they reference to their research report. This ought to tell you that crisis is going to come soon, and it's like they have warned you already. And this is the stark fact in your face. Of course, I understand not many people understand. Of course, they don't tell you what's the implication. They don't tell you to say, go and buy cryptocurrencies now when prices are so low. But this is all the clear message, right? Given pension funds are going in for the first time yesterday to, then last week, IMF is coming up with this news that they are going to come up with a proposal next in the future, negative interest rate and an e-money where they're going to peg the conversion rate to the cash. In regardless of what you do with your cash, you are going to lose that purchasing power. So please, right, why don't you just save it in an alternative today, starting today, because now prices are still low. Now is the time to buy in, right? And when in the future, when everybody go in, then only you go in, you are buying at few times higher. So why not, right? Just put some money into cryptocurrencies, like the most safe one, like Bitcoin today, right? That's what also the pension fund holds. So if it's good enough for pension funds, isn't it good enough for you? So yes, please pass this message around. Can't emphasize this enough, right? That's why I want to put these two news first to really, really get the message across. And really, really hope that as many people as possible, laymen out there, average people, your friends, your families, your loved ones, need to hear this. So these are the two links, right? You can check out for yourself. They don't say anything about cryptocurrencies, but it can be complex, but I hope I have clarified it for you. Go and check out these links, verify for yourself, yeah? Next, Chilean central bank said cryptocurrencies are unable to substitute fiat money. So this is very interesting. Yesterday, we have Spain's government coming out to say that, warning people about danger of using cryptocurrencies. And now Chile's central bank are saying that, cryptocurrencies are also very dangerous. There are a lot of downside, yeah? Cannot replace traditional fiat money. They mention volatility, limited acceptance, and slow payments processing as the key obstacles to the mass adoption of crypto. So yes, so please, right, take this with a pinch of salt and do your own research, educate yourself, think for yourself. Why are pension funds of US investing money into cryptocurrency if it is really so bad? Yeah. Next, blockchain sleuthing startups Chain Analysis raises $30 million. Chain Analysis is cryptocurrency transaction analysis startup. They still managed to raise $30 million in Series B funding despite more than 1 year of crypto long winter. That ought to tell you, right, that there are VC funds, there are a lot of rich people still believe in the long-term potential of cryptocurrency, and hence that they are investing money into startups like this. Just analysis, and especially infrastructure firms like this will benefit regardless of which way the crypto currency goes, right? Because you need, so it is here to stay, and that's why you do need analysis firms like this to educate people, right, of what does it mean. Next, in terms of exchange news, Binance Decentralized Exchange is about to launch for public listing. So they finally have a date, right? And Binance CEO Changpeng Zhao, or CZ, has tweeted Tuesday that the firm is targeting a date of February 20th this year for the public testnet release of Binance Chain, which is a native public blockchain being developed to support the DEX. That means Binance is going to have its own blockchain, something like Ethereum. So Binance was first built on Ethereum, and now they're going to go on their own out of Ethereum and having their own blockchain. This Binance DEX, or Decentralized Exchange, will be available on all platforms including Windows, Linux, Mac, iOS, and Android. And they also say that it works very similar to Bitcoin. Most transactions are transparent, no hidden transactions or private transactions. So the other thing is why they want to unveil a DEX is because they want to offer low latency, high throughput trading, and decentralized custody of funds. I think also they want to cater to a wide range of users because more sophisticated crypto users, more experienced ones, they want something more decentralized. That's why they don't put most of their funds into centralized exchange, right? Next, Bitum kicks off Middle East expansion with UAE crypto exchange. Now, South Korean cryptocurrency exchange Bitum is planting its flag in Middle East with the launch of a licensed fiat to crypto exchange in the UAE. Now, this is huge because so they have now formally partnering with Middle East companies to launch their exchanges in Middle East. Already, Binance have talked about expanding their exchange globally this year, including Singapore, Africa. Similarly, Coinbase as well. They are looking at global expansion, especially Africa region, where they still see, in terms of remittance there, it's still high 20% fees. So they do see a need for cryptocurrencies that can definitely save the fees and definitely a big use case there. And so all these exchanges are going global and they really do see cryptocurrency going much and more mainstream in the near future. Hence, they are preparing the infrastructure to cater for the demand. Next, Coinbase wallet users can back up encrypted keys on Google Drive and iCloud. So very interesting and very good use cases for Coinbase now that they are allowing their users to back up their private keys on Google Drive or an iCloud. This is an optional opt-in feature, is not a compulsory. So at least for people who are afraid that they will not be able to keep their own private keys safe in an offline manner, they can now have the option to keep in Google Drive or iCloud, safeguarded with their passwords, of course. So now this is, I think, a good thing for Coinbase, right? Because they really have to catch up with Binance, which are, launching their own fiat crypto exchange and coming up much more great features, right? So Coinbase as well, it seems like doing a good catch up. And this is really good because I think last week also they are allowing a PayPal withdrawal. So a lot of convenience features for their client base. Very good. Last one, scams. Please be careful. Reddit user alerts of new Coinbase email phishing text scam to fake login. Now, almost every other day there is scamming attempts to cheat people of their crypto. So please be careful. Now is in the form of an SMS text where a Reddit user is very kind enough to actually warn Reddit and everyone else, right, who knows that there are a scam going on, pretending to be Coinbase account, saying, test, verify account, send your money. And of course, the link is not Coinbase account, of course, but still, I think most people will be vigilant, but of course, there are some people who are still maybe very new, they're really inexperienced, and they might just fall trap in this. So please, right, please be careful and share this message around, right? We really need to be careful. We really need to keep all these scammers out of the way. And if no one falls to them, they will eventually have to die out slowly, yeah? So if you like this, please leave a like, please subscribe, and for all my supporters, thank you so much for your support. And really have a great day wherever you are. Live with high energy, live with passion. Thank you so much.